But at the end of the day, it's called mark to market. So what does that mean? What that means is the last thing the lender wants to do is sell an asset that is worth less than a loan, because then the lender has to take a write-off, and that's bad for the lender. They would rather work with the borrower and have the borrower keep the asset if they have the financial capability. And so that's where, call it another due diligence, or
Right.
or a full examination of, like the borrower, right? Or the asset itself.
Well, and plus, if the banks are going to take a loss on it, if the person's paying, if they just keep things as is and the person keeps paying, then that's beneficial to them.
Thus the word extend.
Right.
Right. And now nobody's pretending, but they're definitely extending.
Well, they are pretending because they're not re-looking at the value of the asset.
Well, they are actually looking at the value of the asset, and they know that it's not worth it.
Maybe behind the books, but they're not.
Which is why they're extending. But the reality is hopefully next year will be better than this year. Right. And then at some point, the rubber hits the road.
Well, in 2025 could be that year, because the issue with extend and pretend is that the banks are not putting money into other deals because they have so much money in these extend and pretend loans.